Hey, how's it going? So in this video, I want to talk to you guys about $200,000 per month run rate, or not even a run rate, a $200,000 per month info coaching consulting offer that I am in full control over. Okay. I'm currently, for my agency right now, we're managing the sales team, the CSM team, the marketing team. We're effectively running the entire business. This is a new marketing. This is a new business that we took from zero to all the way to 200 grand a month in 6 months, averaging about a 3.2x ROAS. In this video, this is something that I don't think it's talked about enough in the info space, which is the true P&L and is cash flow management. Been in the info online agency space for about 8 years. Okay. I'm fortunate now to be, part of teams, and I can't say that I've directly managed all this advertising spend. I've been part of teams that's hard to kind of 100% say this was my contribution versus what was the other team's contribution. But over the last 18 months, okay, we and our partners have managed close to about $7 or $8 million in paid advertising spend, averaging around a 3x return on advertising spend for the bulk majority of that spend. So conservatively, we've generated close to about $25 to $30 million online. Okay, this is in about a dozen different industries. Okay, now I want to break down and show you one of our partners, their exact P&L, the ROAS, everything is going into it, how I think about capital allocation, because this is a kind of a unique instance where this is a large personal brand coach consultant who's trusted me to run their entire business. And there's somebody who's very, very wealthy and has done incredibly well outside of the info coaching world, now has a very high income skill that they wanted to turn that into information, and they wanted to create an info business that generates, multi seven figures a year in profit. Okay. So let's just quickly look at a breakdown. Okay. For the month, you can see here, we generated 173,000 in cash collected, 169,000 net of the refunds. Okay. And now when I'm looking at a P&L for an info business, I have a very systematic approach. I've been fortunate enough in my career that I've worked with a couple CFOs at a couple bigger info marketing companies, and they've kind of shown me the structure and the bookkeeping structure that I still use to this day, even with smaller companies where we don't really need a CFO. I still use that same methodology and that same framework, which is this concept of separating gross profit from fixed expenses. Okay. So in our business, okay, the variable expenses in that business come down to the media, the sales team commissions, the merchant fees, the closer, the setter, and the manager commission. Okay. Those are fundamentally the things that I think through. Okay. So I want to first know, what is the gross profit that I need to generate? And then I have a fixed fee base beneath that. My job every single month as the marketer is I'm trying to think, what is my hurdle rate? What return do I need to generate in excess of my fixed fee base? That's going to dictate my marketing budget and my average, how much capital I'm choosing to allocate for that month. Okay. And that's how I think about it. Okay. Now for this business here, we have about $30,000 a month fixed fees outside of the contractors that we're paying. Sorry, it's about $36,000 a month in fixed fees. We actually bumped that up to 45. We're hiring a few other people there, and we generated $83,000 in net profit. Those are variable expenses, and that left us with $46,000 in profit for the month. So let me just calculate the margin on that. So 46 over 173. Okay, so that's 26% net margins. Okay, so I would say for most of the offers that we're managing, we're right around 15 to 26%. Okay, now typically when I'm managing, the cash flows and the marketing spend for a business, I need to ask myself the question: is this a bulk month or is this kind of a cut month? Okay, almost very similar to the bodybuilding or the fitness space, where it talks about you have bulk months, where months where you're going to add fat and muscle. It's very similar in an info business, where if you have a 20% margin but you want to grow 20-30% month over month, oftentimes that will kind of remove your entire profit for that month altogether, depending on how big your spread is, how profitable the advertising is. But if you're operating at 2 or 3x and you have a reasonable fixed cost base, you're probably running with a 20 to 25% margin. Now that's going to be very dictated based on if you have a back end or if you have any organic traffic. But I'm specifically talking about in this business where they do not have a back end. They are purely a front end acquisition arbitrage on that. And we're 100% reliant on cold traffic, paid media, as opposed to no organics. Okay. So I think that kind of an average that I've seen in my entire career has been about a 3 to 4x return on those types of businesses for a high ticket cold funnel. We've had instances where we've done a lot better than that, but I'd say we average right around a 3 or 4x. And that's kind of, as an industry, that's kind of where we are. Okay. Now if I want to scale and I want to grow, I'm basically going to take that 20 to 30% margin, reinvest it into the advertising spend. And then based on how consistent your acquisition is and how much confidence you have, you should be able to know at what point in time you're going to be able to recoup that advertising spend. So we have about a 14-day sales cycle from click to close. So if I start spending in the first week of a month, I'm not going to be rewarded and see the cash starting to compound the third or fourth week of that month. Okay. So that's really important. That's something really important to consider, is that you cannot look necessarily at what you're getting a return in day one. You have to look at the early or leading indicators with a call funnel like this. Now, if I'm running a low ticket funnel or I'm running something with a sales page that's asking them to check out directly on the site, okay, then I need to be very cognizant of that. Then I actually can be a little bit more aggressive. And as long as my front end acquisition looks good and I know how much of the front end spend that I need to liquidate, and I'm good. I can just spend up to that. I don't have to worry at all about the downstream consequences. But when you're running a high ticket call funnel, which I say is our industry average, it's a bit scary because you have to spend and push all your money and see the P&L disappear for that month to then have the confidence later on to know. And been running this offer now for 7 months. We know our numbers pretty well. I'll kind of show you the offer from start to finish, but you can see here December, their existing media buyer spent 110, generated 106 back. Okay, so it was a 0.96 ROAS. So then the second month we spent 9, generated 45, 6 to 16 generated 60, 15 generated 63, 23 to 67, 30 to 106, 54 to 193. That was the big month for us. Okay, now the payment processors are showing slightly different because there's reconciliation, there's settlements that takes a few days. So what's showing on our QuickBooks account here is a little bit different from what we track here. But this tracks settlements. We track day that it runs through the transaction through an Excel spreadsheet. Okay? And then in July, we actually had a pullback in cash collected, but an uptick in our revenue. So it's grown month over month, averaging around a 3.4x ROAS. Okay. Now this plays into our break-even ROAS. This is another super important calculation. Most business owners, frankly, just don't calculate. I ask business owners all the time to give me their numbers and they can't tell me in a split second. That's a huge red flag. I don't take the opportunity or the business owner seriously if they can't tell me their numbers very quickly, very concisely. Okay. You can ask me my NPS scores, my CSAT scores, my activation points, my CAC, my LTV, my ROAS, all those numbers I know top of hand. I've always been somebody that's very quantitative, very numerical. Most of the marketers that I know, they're typically very creative and they're maybe not as analytical as they should be. And then the very analytical people typically are not as quite as good as sales and creativity and things of that nature. So when you can combine those two words of the quantitative analytical side of things and also the visionary that can ideate hooks and angles and positionings and offers and sales and kind of just having the overall ability to paint the vision and be creative and intuitive, that when you can combine those two things as a marketer, that's when you become very dangerous. Typically, those people that are just quantitative are referred to in our space as media buyers. They are typically given a working piece of creative copy, messaging, all the assets, all the funnel. And their job is to just every day, just manage the spend, track the data, pull back. They're not creating a ton of value. That's probably a 6-figure a year skill set. Okay. A multi-7-figure year skill set. Somebody who can understand marketing, who can understand the algorithm updates across multiple platforms, the positioning, the offer, the sales team, the price point, the pitch, managing people. If you can kind of manage and you can kind of have a little bit more of a well-rounded skill set, that's where you become really dangerous in our industry. Okay. Now, if we look at kind of our fixed fee base here for this offer, okay, I know that I need to generate above a 50% gross profit on top of my variable expenses, okay, in order to break even, okay? And every business owner has what I call as the spread, okay? The spread is the distance between your break-even CPA and your current ROAS. So as you saw here, we're averaging about a 3.4 and break-even is a 2. Now, what's interesting is your break-even changes at varying levels of spend. So when I'm thinking about capital allocation for the month, I have to ask myself, what do I think the probability is of us having our existing ROAS? Okay, how consistent is our sales process on the back end of that? And then once I start to scale, what are the cost per lead, cost per call, the early leading indicators of the funnel suggest that we're going to recoup later on in the month. Okay. Now, where things can get a little bit scary is that, let's say, for instance, we were spending 60 grand a month. Okay. We actually had to have quite a large fixed cost base. When I took over this business, okay, the business owner had a fixed fee base of about $30,000 to $50,000 a month in payroll. I didn't want to fire all those people and have to, we care about their livelihoods. So I actually had to spend a little bit more aggressively than I felt comfortable with because I wanted to retain my sales talent, because if the sales talent stops getting enough leads, then they will leave and then the CSM team will leave. Okay. And then it becomes this very downward spiral if the business stops getting the leads here. So it's kind of like a shark. You have to kind of keep swimming with these types of businesses and you have to be mindful of that. There's other factors. I prefer to test acquisition systems at about $5,000 to $10,000 a month in spend and then only scale once I have proof of concept at that level of spend. But because I had to keep this sales team occupied, I actually had to spend a little bit more aggressively towards Q2 than I wanted to. And then I had to basically make these small bets, right? So I had to basically say, okay, do I think there's a higher probability, me spending 45,000 and generating a 2.8x, or do I think there's a higher probability me spending 60 and generating 2.4x? Okay. Now the benefit of spending more, okay, is that you are starting to collect data faster. Now you can ultimately run multiple split tests in one given day that would otherwise take you a very long period of time. So if the business owner doesn't need the cash, if they are just in a phase where they want to scale aggressively, possibly, I will push it to the extreme, because what's going to happen is as I scale, my spread is going to compress, and then I do CRO to widen the spread, and then it allows me to scale further and tap into colder and colder traffic. And then I have a spread compression again and my margins suffer and I scale again. So with this particular business owner, we only generated $70,000 in profit in 7 months off of $600,000 in revenue that we produce. Okay. But what I'm doing is, so outwardly on the balance sheet, it's gone up from about $30,000 when we started working together, about 70, but now there's $100,000 in cash on the balance sheet. And the business owner was a little frustrated in that, and they were concerned about that. And I said, what you can't see is this initial $10,000 investment that you gave me turned into 100, but now their team costs have gone from about 25 to 30,000 a month to about $50,000 a month. They've recruited tons of salespeople that are now on part base, part commission. Like, you're building this cash flowing asset, and we're doing $200,000 a month and kicking off $45,000 a month of profit. So the business is this asset that is compounding. Okay. So I'll tell you the two extremes of this, and I'll tell you about where I've seen both go wrong. Okay. So I had a client recently that we were a big part of. We were managing their offer. Okay. And some of their paid advertising spend, and they were doing about 1.5 million a month. And this business owner was so aggressive to the point where it was unbelievable. So aggressive, brilliant entrepreneur. And what happened is we both kind of started out in the agency space around a similar time. And I was very conservative. When I got my agency to $30, $40, $50,000 a month in profit, and I started distributing those in my bank account, what I did is, before I allowed myself to scale, okay, I wanted to essentially have 10 times the cash reserves in the company account before I started scaling. Okay. And what that did is that gave me a lot of peace and a lot of tranquility. My top line numbers were a lot smaller than my peers, but that gave me this base and this foundation of which now my personal living expenses are covered by my investments for the most part. I'd say about 60 to 70% of my lifestyle is covered by my investments. I had the projected return of my investments, I should say. And versus this other person, what he did is he did something very different. Okay. He reinvested 100% for 18 months. And my agencies for 18 months stayed at $35,000 to $40,000 per month in profit. And he, on the other hand, reinvested everything, and he compounded to a $1.5 million a month run rate. And then I actually got asked to jump on and manage one of the platforms that they weren't doing internally in apps. Okay. And I did some consulting on all their acquisition channels as a whole. But point is he actually had a couple months where he was generating about $100,000 or $200,000 per month. He had incurred this enormous amount of overhead. He had really hired, he had built this incredible company. Okay. And then what happened is his CAC raised by about 20 to 30%. Okay. 1 month. And overnight took $100,000 or $200,000 loss at that. It fell below break-even CPA at mega scale. Okay. And he took a massive loss. Okay. When you're scaling paid advertising, everybody always asks me, what's it like to manage $10,000 a day, $15,000 a day? It feels like you're driving a vehicle and you're driving 200 miles an hour as opposed to 10 miles per hour. And one little movement of the wheel, one little blip, you take your eye off the wheel for 72 hours and you just evaporated $50,000 of shareholder value. Okay. It's like gambling. It's like trading, but you're moving up in stakes. Okay. So I have this feeling every single day. This is by no means a cakewalk. Okay. So I'll give you some context on this. Our fixed costs, I showed you, they fluctuate a little bit, but I'll say they average right around $40,000 to $50,000 per month. It was 30 in that month that I showed you. Okay. Cause we're adding. So that's an average of $1,500 a day in fixed expense. You can see that I'm spending $3,000 a day in paid advertising spend. So I effectively, okay, incur a $4,500 per day cost. Okay. Now, Friday through Saturday, we don't have a lot of sales. Our show up rate's bad. The show rate on this offer across the board is pretty bad. Our closers aren't working a ton during that time because they're a bit demotivated. But what you can see is that over 72 hours, I basically had $2,000 in sales and incurred $12,000 loss. So I destroyed $12,000 of shareholder value in 72 hours. That is the stress inherently that I don't think a lot of people are equipped to tolerate, and it requires a tremendous amount of conviction, cash flow management, foresight, pattern recognition, because with the nature of high ticket businesses, the cash flows are so volatile because a few big deals can ride or die and can move you all over the place. Okay. If you're doing a low ticket business, okay, there's a little bit less revenue concentration. We will typically have 20% of the days in our month that produce 80% of the revenue as the nature of a high ticket, just the business of anything. Okay. It's what is that? Pareto's principle, the 80-20. Okay. That distribution is going to occur in any system. Okay. Now, if paid advertising, if you are operating in a high ticket model, you're going to see these huge fluctuations in traffic versus if you're doing low ticket to high ticket ascension funnel. Webinars are arguably even more lumped. Okay. These are a lump sum play where you're typically advertising over the course of a month to fill one event, and then all of your exposure is riding on one day's performance. Okay. We have clients that will spend $2,000 a day for a month to fill up a webinar. Okay. And the webinar, it might drop below break even CPA and they can take a loss. Okay. So it really comes down to conviction. All of business in my eyes, the way that I manage cash flow, okay, is fundamentally the way that I manage myself as a business owner is I view myself as a capital allocator. Okay. I view myself as an investor. Okay. When I'm deciding which actions that I'm going to take in the business to help it grow, I have to make a bet. What do I think the probability is of the bet that I am making paying off? Okay. And then if I have a really high conviction bet, that I might make my position size larger. Okay. And if I have a low conviction bet, that I will make my position size smaller. And then over time, hopefully what starts to happen is you get more conviction in your sales team, you get more conviction in your numbers, the offer, the price point, and then you can make a decision. Okay. You can make a decision. You can be the business owner that chooses to reinvest and compound the capital quickly and build this asset of the company. Okay. Or you can choose to be the more conservative business owner. You can take your cash reserves out of the business, okay? And you know that you're going to have more stability because you're going to have cash to weather this future volatility that could happen in the business. Our business is very volatile. Our business is make very quick money, very fast sums of money. And I see these internet marketers and these entrepreneurs that are so quick to just assume that arbitrage is going to exist forever. And something will change the markets. We saw it in 2021 when Google rolled out a whole new update that didn't allow our calendar invites to show up on people's calendar by default. They had that little notification that says unknown sender. You have to click confirm to basically accept the calendar invite. It used to just be you can send a calendar invite to anybody. It would hold that spot on the calendar. And our show rates across the board, across our entire industry, went from 70-80% to 40-50% overnight. Okay, so the landscape can change. These are not, in my opinion, unless you have revenue retention, it is not a business. It is a promotion. It is not a business. It is an arbitrage. You have to treat that as such. You can't assume this money is going to be there forever, in my personal opinion. Now, I've seen these info businesses come and go for years and years, and I think that if you have great NPS scores, good CSAT scores, you have a big market, okay, that you can be in business for 3, 5, 6, 7 years, for sure, okay? But that ROAS might fluctuate, okay? And I will not promote an offer that doesn't have positive NPS and CSAT scores. We're at about an NPS of about 55 and CSAT of about a 74 on this particular offer. Anything below that, I actually want it to be an even better job, and we're working on adding some CSM people in this business to help improve those scores and improve the health of the business. Okay. But anything lower than that, you're going to see that the negative word of mouth just destroys your customer acquisition cost. And you have to rebuild a whole new business. And if there's anything that I hate doing more in our industry, it's going from 0 to 1. Going from 0 to 1 is excruciating. Going from 1 to 10 is easier. Right now is the most fun part in the business. Going from 0 to 200 grand a month was excruciating. It was not fun. I didn't enjoy it. Okay. Going from 200 grand a month to $1 million a month is doing more of what's already working. And I have leverage and I have systems and I have an enterprise that is handled, that will do lead generation, lead conversion, and we even have a sales team manager at this point in fulfillment streamlined. That's where things get really fun. That's where I can sit behind my computer all day and kind of just make one little push of the button and see a whole kind of company explode. I'm in a very high leverage position. Okay. Now I have bulk months and I have cut months. Okay. What I want to do for this particular business owners, they have so much cash reserves on the sidelines, is that what I want to do is they prefer me to be more aggressive, more risky, and scale very quickly and build this asset faster, because media compounds faster than any traditional investment. If I'm getting a 3.8x ROAS, okay, a 3.8x ROAS, that's effectively the money is quadrupling every 30 days. There's no other arbitrage that exists in other traditional investing. Okay, I'm interested in crypto, Bitcoin specifically, but I can get a 4x every single month. Okay, that's why I've been able to take what was initially a $10,000 per month advertising budget in January to a company cash count that 6 months later had $100,000 in the company count and produces $50,000 a month of net free cash flow and a $200,000 a month run rate and a 12-person staff. We have 4 setters, 4 closers, and then 4 other people that are on the CSM operations fulfillment side. Okay, so let me just check my notes, see if I didn't figure anything else. Okay, so showed you guys the P&L. Okay, I want to tell you about the client that did just lose their entire business. They took nothing off the sideline. They took a $100,000 loss overnight. Okay, and they didn't have enough cash flow in the business. As a general rule of thumb, I'm a bit more risk averse, fear driven. I like to have a year's worth of cash flow on the side of the business because I know that my investments at 10% and effectively in perpetuity almost cover the expenses of the business. Okay, but if you're starting with such a really small amount of money, it might make sense to really bet the farm and be a bit more aggressive. Okay, there's times where I've had people that I thought were a little bit more balanced than me and took a little bit more calculated risks and are much further along and started generating a couple $100,000 a month in net free cash flow, but they still had some risk or some margin for error and some cushion there. Okay, but I just prefer to be more conservative. So I've seen people lose everything. I've seen people be too passive, or I think I'm guilty of that. But what I can say is that this passive strategy, like defense first, of pulling cash out of the business, has given me a lot of freedom to take really, really aggressive bets because I don't need the money anymore for these investments. I'll will be okay with the nest egg that I have saved. And what I can then do is compound the hell out of this and expect no return for, 16, 24 months and really compound this to a large, meaningful size with true enterprise. Okay. What I will say though is that if you are building a staff, if you do have some fixed expenses, now what I will say is with AI, I think that the operations expense, the fixed expense can be so exorbitantly low, call it 10 or 20% of top line, that you should really also just make sure that you have, 5 to 6 months of those fixed expenses there in the company account, in my personal opinion, just to make sure that you don't have to, they're taking care of people's livelihoods. But the variable expenses, I think you can be very aggressive with that, because if you know your break-even CPA is 1.8, you're averaging around a 3.5, and the early leading indicators look good, and spend a fortune. You know what I mean? Because you could triple the advertising budget as long as your cost per lead holds stable, or maybe you 3x the advertising budget, but cost per lead only goes up 20 or 30%. It's statistically and it's likely and it's probable that you probably won't go from a 3.6 to a 1.8, but you have to keep an eye on the early leading indicators. So it's a balance, okay? It's assessing probabilities, it's risk management, okay? But you have to have somebody on your team that isn't just a media buyer, that isn't just a marketer, but is a capital allocator, that's a strategist and knows when to push, when to pull back, when you have a lot of confidence, when you have a lot of conviction, how to manage your position sizes, okay? So like for instance, I use this idea of probabilities and statistics and applied statistics every single day. Every single day I'm making bets and the probabilities that I am guessing that something is going to pan out. Like right now I'm deciding if I'm going to expand this $200,000 a month info business, if we're going to launch a new VSL funnel going after a different segment in the US market, or if we're going to take this existing messaging and expand to the other big four. So that's Canada, US, UK. Okay. Now, ideally, what I want to do is I want to make bets that have a very high payoff, have a low investment, and have a very high probability of it working out. Okay, that's how I view all of business. It's just assigning probabilities. And what's interesting is as the further up that you raise in the game, your mentors can't help you as much with tactics because only you understand your business better than your mentor does. Okay. And oftentimes you know the probabilities better than your mentor does. Because your mentor, if they're successful, like I pay my mentor $5,000 an hour for his time. Okay, Mr. Jeremy Haynes. Okay, he's just one of the mentors I've had. And I've had so many. I've had Chris Walker, I pay him $2,000 an hour. I've had Tanner Chidester, I paid him $1,000 an hour. I'm supposed to do a call with Robbie Avavala for $4,000 an hour. I've paid a fortune to all these mentors. And it's always these kinds of questions of like trying to assign and make trying to ascribe a true probability of success. A lot of times they can help a ton, and mentors have done everything in my life and have helped me so much. But sometimes it's like, do I wait a month and pull more cash off the business and pull more cash flow out of the business? Or do I hire this closer and take a shot? And then I have another probability, which is if I let that closer wait 1 month before he ramps, is he going to be taken by another offer? And, if there's just so many different probabilities that go through my mind, right? Like right now we have a low ticket funnel that's historically liquidated about 30 or 40% of the advertising budget as a downsell. But now I have to make a bet, which is, do I think that 20 or 30%, as it's decreasing now, do I think that it's cannibalizing my high ticket business? Would it make sense for me to send and redirect that traffic to a mid-ticket webinar funnel where I'm leading the presentation, or send it to a triage call where the setters can qualify it and put it on closer team? How many of those low ticket deals would have became our lowest tier high ticket package as opposed to a $200 thing? So it's hard to know because you know your stuff better than that mentor oftentimes. So I'm always thinking in terms of bets. Like how much effort is this going to take? What is the projected impact of this? What's the probability of it's working out? Because we've all as business owners have been through this situation where you invest 60, 80 hours on some initiative, some product line, some hire, and it doesn't work out. That's why, in my opinion, and I've heard, Alex Becker say this a lot, but the quality of your decisions is actually going to dictate your success way more than how hard you work, right? And I think the quality of your decisions can come down to how much you read, how much quality feedback do you get from your mentors. Okay, that might sound contradictory to what I said earlier, but my belief fundamentally is if I have 4 to 5 intelligent, believable people who understand my situation, they're looking at my situation, I will have less blind spots than if I'm solely the one making that decision myself. So I would say before any major decision in my life, I talk to 4 to 5 people in my circle that give me a lot of strategic guidance and have reversed some of I forget there's a great book on this called The Road Less Stupid by, I think it's Keith Cunningham, right? And he talks about the ignorance tax, right? If you could undo or rewind some of the worst business decisions that you've ever made in your life, how much better off would you be, right? Because I know for me, I've had one bad hire that's erased 6 months of good decisions that I made, right? So that's the order of magnitude that you're talking about. And just like that goes back to the analogy I talked about earlier of driving 200 or 300 miles an hour when you're spending this much per day. I'm not working as much as I could or that I did when the business was getting started. I'm now really thinking a lot, planning a lot, thinking a lot, and I'm making, 2 or 3 high quality decisions a day, and they're compounding compounding of those good decisions, I think is what is going to turn this into the $1 million a month, info offer that I want it to be. So the factors that you should make, okay, so just to summarize everything, okay, when I'm making a capital allocation decision for a marketing decision, I'm looking at number one, I'm looking at the spread size. Number two is I'm looking at the risk tolerance that you have. So how much cash flow, how much liquidity do you need to sustain your lifestyle? Okay, what does the LTV and the revenue retention look like? Okay, if I'm, let's say, operating in a 7x return on ad spend, okay, and my break-even ROAS is at a 1.5x, then I think you should bet the farm and and it's statistically significant. It doesn't mean you closed one crazy fringe deal for 20K and you spend $1,000. You're saying you're 20x. No, that is, remember, this is volatile. Okay, it has to be taken over a statistically significant sample size. So you might need 20 to 30 high ticket deals to know your true ROAS. Okay, but if you have a statistically significant 7x ROAS and your break even is 1.5, then in my opinion, you want to make a very aggressive capital allocation and try to break it. Try and scale so aggressively that you bring your spread, you bring the ROAS back to 1.5, back to break even, because in that process, you will get infinitely more data. Okay, and that will allow you to scale much, much faster. Okay, that is if you are not reliant on the income. Okay, I told you when I first started, when I got my first big marketing client and my agency got to $20,000 or $30,000 a month in profit, I spent 6 months just trying to hold on to the deals that I had, because the difference in me having $50,000 in my bank account versus $300,000 in my bank account was so different that I wanted to have that base first before I tried to take my really big bets. And I'm still candidly in that position where I'm not going after these crazy inflated revenue metrics. I could have a much bigger company than I do now, but I'm choosing to take more cash off the sideline because I think it will free me up later in life to take bigger bets. Okay, I personally viewed my personal finances that if I could get to $500,000 net worth, that would allow me to have $5,000 or $4,000 a month in personal income. That would allow me to live a decent lifestyle else for the rest of my life in perpetuity. That is like such an amazing milestone. I don't know why marketers continue to gamble and they have the ability to get that in 3 or 6 months. I think that is so delusional and so crazy because we live in this industry where everybody's like chasing these vanity metrics of like, I need to have as much revenue. I need to have as much revenue versus I think the peace that I have and the net worth that I have, the cash reserves that I have on my personal side, that gives me so much peace and that frees me up to never have to work a shitty job again that I don't want to, God willing, that I don't lose my money and I don't make a bad investment, which I don't think that I will. Okay. But that is so much more important to me than showing off a crazy revenue numbers. The idea that I reach personal escape velocity for myself to have this kind of minimalistic basic lifestyle. I don't want to live on $5,000 a month for the rest of my life. For me, I get to $1 million net worth. That would give me this $10,000 a month, $8,000 a month income range. I could live a decent lifestyle, as maybe a single bachelor. And then I kind of think is right around 5 million is where I really start to have, the ability to support other people. So that could be a wife, a partner, or children. And it's risk-free income as opposed to, just being on this hamster wheel. I've seen so many people in LA a victim of this where they make $2 million a year, but they spend $2 million a year because by the time they were making $2 million a year, they had 4 kids, a private school, and the lifestyle kept up with their income. And they live in stress and fear and anxiety. As a personal rule of thumb, I do not spend in personal living expenses more than 10% of my overall net worth. So I will not exceed $100,000 per year in personal spending until I cross that $1 million net worth threshold, which is how I've always operated. Okay. So I think that mindset has been really helpful for me from both a business perspective and from company perspectives. Having those cash reserves of playing a bit of defense and being really frugal in my personal life has freed me up to take bigger risks. Okay. So look at your spread size, look at your risk tolerance, look at your revenue retention. What's your confidence in your acquisition channel? Okay. Is your ROAS statistically significant, or did you have 250K PIFs that came through and are influencing and giving this crazy inflated return on ad spend, which is not indicative of what your true ROAS is going to be? In that instance, I would let it play out a little bit longer. But if you've consistently, off of 20 or 30 data points, shown that you have a 20% close rate, $100 earning per book call with this rep on this traffic source from this acquisition channel, then I would start to bet pretty aggressively. Okay. And that's also why I'm such a big component of once I've gone from 0 to 1, I have something that's working. There's such a great risk adjusted return on the investment of doing more of what's already working. That's the whole Alex Hormozi thing of like, he's always biased to do more, better than new. It's like everybody does like $10,000 a month of Facebook ads. And then they think, oh, I'm going to switch to YouTube. It's like, no, there's so many variables there. That's a new traffic channel, which means a different amount of friction in the funnel, which means a different sales process. Like there's so many unknowns that could go wrong there versus you have like an 80% chance If you just increase and duplicate your budget by 20 or 30%, that you're going to produce 30% more revenue. It's very little effort, very high impact, very high probability of success. So I take those bets compounded time and time again that produce these crazy outsized returns. Okay. And then if I get to the point where I'm spending $2 million a month on Facebook ads and I think I've totally tapped out my market, I'm serving 3 times more impressions and my frequency is like a 5x, I'd probably rather launch some new VSLs on the same platform to try and capture these different market segments. I'm going to launch a new video about how I launch other VSLs to capture different market segments in a couple of videos here, but I'd rather do that than go to YouTube. And then if I had to say, would I rather, once I've exhausted those VSL funnels, would I rather go to YouTube or would I rather expand to the big 4? I'd probably rather expand to the big 4. Right. And then once I've expanded to the big 4, would I rather want to go to YouTube or would I want to go to PPC? I'd probably start with PPC branded keywords and do a warm retargeting campaign for all website visitors. And then I would want to go to cold traffic YouTube after that. So that there's the sequencing and the probabilities in which you're making bets matter so much. And the cash flow management is such an important component of that. Okay. So most of the time, I think you can get one platform to 8 figures. Okay. That's something else that I'm just kind of continuing to relearn today. Like I'm a big fan of like diversification as well. Like that's kind of like a pitch we've gotten a lot of agency deals with. I still believe in that. I still think that makes sense. But most of the clients we're working with now are already doing 8 figures and then they diversify. But I think most of the time you can get that one platform, particularly if it's Meta and you have a big TAM, or it's YouTube and you have a big TAM, you can probably get it to 8 figures just on that one platform. The one exception to that is PPC, or if you're in a local market, PPC can be tough to scale to 8 figures. Again, that can take a really long time when you are search-based versus interruption-based marketing. Okay. One thing that I'm really working on right now, after kind of speaking with Ryan Clogg and getting to learn from him more, is once I really feel like I've tapped out and I've done CRO on our existing call funnel and I've tested hundreds of creatives and I can't scale our existing call funnel, usually that happens right around 400 or 500K a month from my experience. What I'm then doing is I'm creating different VSLs to capture different market segments. So for instance, Cole Gordon right now, he's talked about this like at closers.o. He runs saying, coach consultants and high ticket service providers, I'll place a setter, I'll place a closer in your business. He would always run that and he would always get tax planners and estate planners and asset protection people. And now he's creating a whole separate funnel just for that. So that's an unbelievable risk adjusted bet. That's a phenomenal, that's an exceptional decision as an executive and as a CEO, because the probability that if he markets those people and captures that new segment is so high, the probability of converting those people is so high. Like there's very few variables or things that could go wrong there. Like us as internet marketers, we are fundamentally this node encapsulating this entire sea of potential buyers, right? Like me sitting here in my little apartment here in Pacific Palisades, California, I'm effectively running one campaign for one offer that can touch millions of people across 4 continents in 20 different countries. So we just underestimate how big our TAM is. Alex Hormozi with Gym Launch did 50 million a year and 20 million in EBITDA per year, selling to freaking micro gym owners in the United States on Meta. You never got YouTube to work. So it's always just more and more and more and more. Add a zero to the marketing budget. When I spent time with Ryan Clogg recently, I was at Jeremy Haynes Mastermind. I got to spend some time with him. He does 3 to 4 million, I think 5 million a month now at Warrior Babe. I said, Ryan, could you tell me about how you made your decision to focus instead of doing what I'm doing, which is, I have my hands in 10, 20 different partnerships, at any given time. And he said, dude, so much easier to scale vertically than it is to scale horizontally. He said, all I need to do is add a zero to the marketing budget. Add a zero to the marketing budget. Now, I think most people aren't so good at marketing. They don't have the luxury. They kind of exhaust their one acquisition channels, LinkedIn organic, Instagram organic, DMs. Those things have a little bit more of a capped upside, but paid ads, man, that thing scales fast. And the upside, there's not much of a limit there in terms of the upside, in terms of the market size, rather. Obviously, you're going to get diminishing returns at scale, but the market is so large. And if you know how to have a broad range of hooks, a broad range of VSLs that all redirect to the same sales team doing the same thing over and over and over again, they can get really, really big. Okay. And where I see most of the internet marketers going wrong is they get distracted and they think that they can break this rule and they forget how lucky they are and just how fragile and difficult it is to go from 0 to 1. And then they break this thing that was so difficult and so challenging to build in the first place. Okay. Because going from 0 to 1, you have to have offer, positioning, pricing, script, salesperson, timing, platform. You have to all these crazy variables that each have 4 or 5 different options to all then come together into this one beautiful thing where you put a $1 in and $1 out. That can sometimes, as me, as an experienced marketer, take me 6 to 9 to 12 months to hit that proof of concept. But then 1 to 10 happens so much faster. That's why I don't do 0 necessarily want anymore. Very low probability bet, high effort required, low probability of success. Okay. So that's pretty much everything that I had for you guys today. I'll just show you for today's numbers. Again, we talked about we have $3,000 a day in paid advertising spend incurred per day and $1,500 a day in fixed expense. We did just about $7,000 in sales today. We have a couple low ticket deals that haven't been updated on the sheet here. $6,500 in cash, $6,500 in revenue, and then a few automated revenue low ticket deals that brings total cash collected for the day to $7,000. But you can see here that for the second week of the month, we are already at a $8,000 loss. You can see we operated an 18% net margin. When I spread out fixed cost fee to instead of $45,000 per month, just saying $11,000 per week. Okay, you can see that for this first week, okay, we spent 18, generated $35K in manual, $7,000 in existing customer installments, $40,000 in cash collected, 2.7 ROAS. Break even ROAS is at $3,000 a day is 2.0. Okay. And 20% close rate, 3,700 AOV, liquidated about 11% of the ad spend on the downsell, fixed cost base of $11,000, assuming a 5% refund rate. We're actually much lower than that at about 2.3%. Okay. So we did a little bit better than that. We also do a little bit better than that in terms of fixed costs. I'm actually cutting a few things hires that didn't actually pan out right now, but that left us with about call it a 20% net margin. But because of the nature of the volatility of our business, you can see Friday through Sunday, this second week, it's all banking on how we do Monday through Thursday of this week. That's when all of our revenue comes in. You look at July, you can see the same thing, right? Which is Friday through Sunday, I want to kill myself and I don't want to get out of bed, and then we crush it. And then Friday through Sunday, I want to kill myself, and then we crush it. And then Friday through Sunday, I want to kill myself, and then we crush it. It's shit. It's just a shit show. So that's the business. Okay. But if you know how to manage the cash, you know your break even ROAS, you know your cash flow, you know your fucking numbers, you have somebody who understands accounting, finance, financial reporting, marketing, and knows when to pull back, when to make a really big bet and ride that wave and really scale quickly, knows how to look at your sales team capacity, know if you need to spend more to keep them occupied. Okay. If you have somebody that knows how to kind of manage all those components, you can make a tremendous amount of money, and you can make millions and millions of dollars in the course of a year. And hopefully, if you're smart, you're not like most info marketers that you just keeping it all on blackjack on red and you keep reinvesting, but you take it into assets and investments that have true revenue retention, true enterprise value, and true predictability to build your network. Okay? So that have nearly the same expected return, but do have that long-term stability there. So that's everything that I have for you guys today. Last thing I just want to mention is we also did hire a sales director. I hope this is helpful for you guys. I spoke with an info marketer doing $4 million a month today to help me create this comp plan. What we are doing right now is, so our model, okay, we met with one of our sales team managers today and we said, okay, here's the plan to go from 2 to 2 million a month. Do you want to be part of this? Like, we met somebody that we thought is exceptional, being as if they had industry acumen, they understood our industry, they understood our niche, they closed multiple seven figures, they had both player and coach dynamics. Typically, you're going to find that managers have a little bit more, they're closer on the empathy spectrum in terms of human beings, and salespeople can be a little bit higher on the narcissism end of the spectrum. Okay. You can tell by looking at somebody's Instagram, by the way, kind of like where they sit on that hierarchy. I found personally, if you're doing direct to consumer, like high ticket info sales, I actually want somebody who's a little bit more narcissist. Like if somebody has like an Instagram account with like, 20 pictures of them on a Lamborghini, I will not do business with that person. I won't like hire them as an executive in my company, but I will hire them as a high ticket closer because I think they'll do a good job. Now, obviously, I'm always putting them on offers that have high NPS scores and high integrity and accountability. But with a manager, you need somebody that has higher EQ, higher empathy, and better management skills. I mean, I saw this, when I was a college athlete. I played Division I college tennis, and the difference between a great coach and great player is two completely different skill sets. So anyway, needless to say, I'm saying all this because I met somebody recently that had industry acumen, understood our space, was a customer of our space, believer in our space. That's so huge. Okay. If you have somebody that has authority in their space, that will trump somebody who doesn't have authority in the space, but has sales skills. Oftentimes, ideally you get both, but this person understood our space so well, was passionate about our space, like felt like he was like his fucking mission on earth to help people in this space. Okay. So he had that. Number two is he had tremendous sales experience. Number two is he had management experience. So yeah, I had a unicorn because I have a pretty good network at this point of info marketers. If I were to put a soft feeler out saying I'm looking for that unicorn that has those three things, it would still be exorbitantly hard. So when you meet somebody that's exceptional like that, I paint the vision, I paint the future, I tell them, this is what I want to create for us in the company. I want to take this from 200 grand a month, $3 million a year run rate to $30 million your run rate. Do you want to be part of it? Here's what we can afford to pay. Okay. What I'm finding with most of the clients is that they can do between a 3 and 4x ROAS. So this goes back to the P&L that I showed you on the profit and loss. Okay. You're going to see at that ROAS, 33% of top line immediately going to paid advertising spend. And then you're going to see 20% going to sales team commissions. That's 10% to the closer, 3% to the sales manager, first layer of management, 5% to the setter. And then if you scale past that to do 20 million a year, you need 20 reps. And typically one manager can manage like 4 to 5 people. I've seen one time one guy manage 10. Okay. And you could save yourself a little bit of money by having one layer management instead of two. But usually in my experience with the $20 million companies, there's not one way to skin a cat, is that you then have a sales director above the manager that will manage 4 to 5 reps underneath that director. And they get a 1.8% override across the entire team. Okay. And that's going to bring their OTE to $300K to $500,000 per year for this rep. Okay. And that is going to bring my overall cost base to 20% of top line. And then we're going to allocate 20% to fixed costs, 10% to refunds and chargebacks. We're actually lower than that. We're at 3.5%. And that leaves us with 20% net margins. And the breakdown of the way that this is shaking out in terms of our funnel, it's $100 per book call, 20% cancellation rate, 50% show up rate, leaves us with about $300 to $350 per show, 20 to 25% close rate, $1,500 CAC, $5,000 AOV, and about a 3 to 4x ROAS. Those are our numbers. We collect about 65% of cash up front, and we collect another about 15 to 20% on average, and then they usually default on the last 10% of that on average. Okay. Since inception, we've collected about 80% of our accounts receivable to this point, 80 to 90% actually. Okay. So that's pretty much it. I hope this was helpful. Maybe this is a pretty niche topic, but I think this was actually one of the most fun videos that I've made in a while. This is everything that's happening for me right now, is everything that I'm working on, that I'm thinking about in the company. I have a bunch of cool split tests that are running at this moment in time. And yeah, I hope this is helpful to somebody. So just with all that to say, I'll just make one last final note here. Okay. If you go to westchannelmedia.com, okay, I have a website here. And this video, I talk about my background. These are all the companies that I've helped over the course of my career. Here's all the case studies and what I've done in the close to last decade of me being in the space. Here's who we help. Here's what everybody has said about working with us. There's some pretty big heavy hitters and some industry leaders in our space and what they had to say about us. Some FAQs. If you're doing more than 100 grand a month and you want a growth partner to come on and help you out, book a call. If you are doing less than 100 grand a month, hit me up on Instagram, or, just, you can still book a call. Somebody in my team can reach out, and we have some consulting, some stuff that is more done with you instead of done for you. You can try and help you out and point you in the right direction. We're here to build goodwill, build value, build an audience, and help people get to the point where they could be a candidate for our done for you agency. So anyway, I hope that was helpful. I'm going to tune off now and go to bed, and I'm going to watch a little bit of a TV show called Shameless, but hope this was helpful, and I will talk to you soon. Thanks.